Welcome to Java. Thank you kindly for joining me. It's April 23rd, 2025. It is also Wednesday, which means it is Discord discussion day. Now, for those of you that are new, we have live chats in Discord, 5 o'clock Eastern Daylight Time. So if anybody would like to join us there and you have any items you either have a question about or something that you would like to bring up, please have that for us tonight. We'd love to have you there. Now, got quite a bit to cover today. I'm going to do my best to get through the bulk of this. I am going to start with the market news, going from 0 to 145, not just talking about tariffs, but also the speed at which things are happening. So with all of this, let's get started as we usually do with the markets. Now, Beer Greed meter has headed back towards the grid. Now, we've got quite a few things that happened overnight and mostly headline driven. Now, with all of this, we've got more people jumping into this market again as they see easy trades coming in. Now, what is driving this right now? Daily driver are the headlines. Now, this is a transitory push green for the markets, definitely to start with. I'll go over that in a bit, but mostly this is on now the current administration, the United States, saying they're friends with the Fed, that he's not firing Powell, as well as that they will be nice, in quotes, to China and drop tariffs, although they won't be zero. So they're going to be somewhere between 0 and 145%. So a little bit of backtracking on this as they see the damage that has been coming in here. Treasury Secretary also warning about the unsustainability of these tariff wars going on. Now, this is all over the news. Hit last night, markets went green. We've got Asian markets in the green as well as European markets. We've got cryptocurrencies up $94,000 for Bitcoin, north of that. Floating all ships, so to speak. Now, we've got a couple of quiet things happening in the background. Japan left with no negotiations, so, or at least no trade deal. They did begin some negotiations, and the only thing that came out of it, for the most part, that they said was that they would have to correct the United States math in this. Now, not really surprising, not going to make any jokes in there as far as American math versus Asian math. But we've got some stock tickers that are going to be in the watch this morning if you are a trader. Now we've got Intel, Tesla, booming. So if you shorted Tesla, you're probably not going to be very happy this morning. We've got Nvidia moving quite a bit. Newmont is gold mining company. Palantir, I'll talk about them in a bit. And Boeing. Now, they're speaking about commercial airlines being up, but really that's on the defense contracts. So with all of this, we've got the markets began getting a bit of a boost yesterday, kind of towards the close, but really with these headlines coming out overnight, that is what made the markets move. We've got the futures saying this is going to continue for a bit. Now, this is all on the idea that now all of a sudden with the tariffs, everything's going to be fine and the economy is just fine. So we've got gold falling under the pressure that I was warning about yesterday. Hit 3,500 briefly yesterday. It's already down to 33.30. Now, by no means is it going to plummet, as some people are saying, is in for this correction, for a bit of a pullback. I believe this is a purchasing opportunity. If you've missed it before, this is not financial advice, other than you should be holding some of this. You want to do as the central banks and the larger money are doing. If you've got any ability at all to have some gold in your portfolio, physical, I think that would be wise, my personal opinion. Now I want to go a little bit to the calendars. Not too much this morning. We've got Fed presidents coming out and speaking right at market open. We're going to get the PMI, which is going to be large, and then talking about the Fed beige book for this afternoon. So it's all about the Fed as far as the calendar goes. We're going to get a blurb on new home sales at 10 a.m. Now, I'll be watching that because I believe there's a bit of pullback on that, and that can hit the perceived wealth effect. Now, if people believe that they're wealthy, they're more willing to go out and spend. And spending is the bottom of the real economy. It's not about all these numbers they're coming out with. Thursday, getting jobless claims durable good orders prior to the market open. So be positioned for what those numbers could be. We have quite a bit going on in the markets and behind the deal. Now, I'm going to start with Capital One Discover merger. These are large credit card companies based out of the United States. They are global, cleared by the Department of Justice. Now, this is a $35 billion mega deal of mega banks. What is really behind this story? Not so much about the merger, but more that they deal with, first off, non-prime market. What does that mean? Means a lower tier of spenders. And they are saying that the consumer is just fine and strong. Well, fine, strong consumers don't necessarily need credit cards. And when they do use them, they pay them off prior to the end of the month. So they don't have to pay upwards of 25% interest. So I think this is kind of a self-interest comment that they've made about this. But the larger and scarier issue on this is that the clearances for massive bank mergers, and now we've got more too big to fail banks that have been cleared to go forward, as opposed to breaking these up lower. Now, we all know in the back end that why they are doing this is because this is all gearing towards this credit lockup that we are about to see, credit changing in general, and the banks moving to a cryptocurrency or central bank digital currency system. Now, really, it's this, well, I should call it stable coin because that's what they're going to be calling it. Now, going back to the real economy, in our market bits, we've got Intel is doing job cuts of approximately 20% across the board. And it's because they're having issues and have to do cost cutting like many other businesses currently going out there. They're not a small business. We've got all of the larger ones. We had Microsoft just in the news the other day, also cutting jobs. So we're going to watch this hit sooner or later. It's not a show of strength. We've also got in the United States student loans now coming back into the markets, and the defaults are rising. We've got on Google searches and links for how to save money or how to spend less are on the rise. In fact, this is probably the largest searches that they've had for these in years since the great financial crisis, as they call it, the GFC. Now we've got paired with this foreign investors selling more treasuries. That's bad news for US borrowers. Why is that? If foreign investors sell the US treasuries, that means they're jumping out of the dollar. But what that means is yields have to increase. We're watching that 10-year yield for the spike and for increasing now. With all of this, which I didn't go over, but the dollar is gaining some strength. And the 10-year yield is also going up. And what that means is money flowing back into the markets. But when this yield rises, it's loosely tied to things such as mortgage rates and credit card companies. Now, what that means is more expensive debt. So all of these people that are in debt or trying to borrow can no longer afford it if they increase these costs. Okay. We've also got Hapag-Lloyd is another carrier shipment like Maersk. They're saying that 30%, roughly 30% of China's United States bound shipments have been cancelled. Now, I think this actually behind the scenes had a large portion to do with why they're going to step back and try to accelerate an agreement, because this is everything that was already on the ocean going. So that's going to have massive effect. It's going to ripple out probably in about 30 days from now, is my estimate. So having all of these shipments cancelled, if you see your orders cancelled or can't get some of your supplies, this is what's going on. So we've got the ECB, European Central Bank, predicting wage growth will slow sharply at the end of this year. Now, Lagarde just came out saying that she doesn't see a recession in their area. Couldn't be farther from the truth. We've got a third of German firms planning job cuts in 2025. We're already done with the first quarter. That means quite soon they're going to start more job cuts. Now, the German private sector falling back into contraction. And in fact, these are separate stories from different areas of reports. We've got Germany facing their third year of zero growth. Now, if this continues, it cannot continue without the effect. We're going to see severe unemployment begin to happen, and from Germany it ripples out because they are the powerhouse of the EU. Now, the UK is already hurting. They've already got job losses. So those two comprise a larger portion of the Western world from that side. Now, they're also saying the IMF, International Monetary Fund, they're admitting world economic order undergoing major reset. So we are headed towards the great reset that they have set up sometime. They're very happy about this. It's going swimmingly along the way that they wanted to. Now, back with the United States, I was talking about the debt increase. It is already rippling out. The United States mortgage rates rose again, highest since mid-February. Now, when these rates go up, home buying slows, and that affects the perceived wealth again. Now back to the mega banks. How payment leaders can use cash flow insights to boost lending. Simple enough story. However, what's behind this is they are growing their digital payments and coupling it with this open banking framework. What does this mean? This means that they are now going to be leaning on, as far as security measures, they're going to push forward towards KYC, know your customer. And with this, they're going to be pushing more of the biometrics, more ID, more digital background information. So this is privacy and freedom going out the window with all of these larger banks. So if we allow these banks for these massive mergers and then allowing them to do these digital payments, again, stable coins, CBDCs coming into play, and they're going to require all of these registrations before you can get a loan for anything. So get out of debt, try not to use it. A couple other things. Bitcoin is now the fifth largest global asset, surpassing Google in the market cap. And as I was saying, it's had quite the morning on all of this, kind of pairing with gold up with assets. Now, with the Fed, we've got Kashkari saying that the Fed must ensure tariff inflation is not persistent. So how are they going to do this? They're talking about cutting rates. Now, with this, that's going to be more easing, quantitative easing, flooding the money supply, and that in itself will increase inflation. Now, if he's talking about bringing inflation down, hiking, they're going to do this in another way. So this is all heading towards the same system. Now, quickly, SEC Chair Atkins saying their top priority is to have a firm foundation for digital assets. Now, firm foundation means they've got these payment systems already in alignment, and that's their whole goal, of course, is to have this taken care of. So couple of other things that I'd like to mention because this is going to affect us all going forward. And this is really part of what also made that decision. China is doing gene-edited super soldiers with artificial intelligence power. They have this now. United States also has this now. It's just that China is a little bit more advanced with this. They are the king of drones, as well as a lot more technology that they have been suppressing the information for in the United States. So they're a lot farther along than the United States in general has been led to believe, in particular those that watch mainstream media. Now we've got their lunar chief accusing United States of interfering in joint space programs. Now, There's a lot going on behind this, but the battles that are going on here are not just currency war, massive currency war, but there is war going on for the information in space as well as redundancy. That has a lot to do with also Starlink and the artificial intelligence projects. Now we've got these gene therapy super soldiers also with the chips. There's quite a bit to go into that. We do talk about that in the chats, by the way. We've got Musk talking about Optimus, saying they're affected by China's export curbs on rare earths. Now, this is their entire point, is to kind of halt our progress with the chips and what they can with the technology. It gives them more of a leading edge. This is much more effective than even building warships, so to speak. They've also got newer technology in their cables as for the fiber optic, as far as having secure communications. So we're going to be watching these guys duke it out in the near future. Now, I do want to mention Palantir is United States corporation. They are the artificial intelligence behind the military. They've got Titan is the name of it, AI combat vehicle, and they are rolling out more of these in mass numbers. So using Anduril is also the drone company. Northrop Grumman is a larger defense company, as well as L3 Harris. Now, combined these, as well as I was saying, Boeing earlier, they are one of the larger benefactors for all of these defense contract spending. So I know this went on quite a bit, but there's so much going on. I wish you all a wonderful Wednesday trading day. We've got green markets at the moment, expecting that to continue probably through the bulk of the day without a shift in major headlines that could damage that. So always caution, we're still headline driven. So with this, not financial advice, but I hope that you do well. Until I see you again, stay free.